Hey everyone, ready for another deep dive? Today we're looking at India and China.
Oh, interesting.
Yeah, and specifically this research report
Okay,
called
yeah.
CLSA Global Equity Strategy, Pouncing Tiger, Prevaricating Dragon
Hmm.
from November 14th, 2024. And what's got us really interested is how much CLSA has. Like,
Oh, yeah.
completely flipped their perspective.
Interesting.
Just a month ago, they were saying shift investments from India to China,
Right.
and now they're saying completely the opposite.
Wow, a complete 180?
So we want to figure out, like, what's behind this dramatic switch.
Yeah, things change fast in global markets.
That's right.
This really shows that,
Yeah.
back in early October, CLSA was so bullish on China,
Right.
but something has clearly changed their minds.
All right, so let's get into like, what's going on with China?
Yep.
What made them change their mind so quickly? The
Well,
report calls China the prevaricating dragon. What
yeah.
does that even mean?
So it's like Chinese equities got hit by three things all at once. The first is that Donald Trump is back as president.
Oh, wow, so Trump 2.0.
Yeah, Trump 2.0, as the report calls it.
Okay.
And of course, that brings back the threat of a trade war with China.
Right, right.
And this is happening just as China's growth is becoming more and more dependent on exports.
It's like we're going back to those tariff battles from his first term.
Yeah, exactly.
Those are some crazy times for global trade.
They really shook things up.
But is it just Trump coming back? Or is there more going on?
Oh, no, there's more.
Okay.
China's recent stimulus measures haven't exactly inspired confidence.
How so?
It seems like they're more focused on managing risks like debt
Okay.
instead of really trying to boost economic growth.
Right. So it's not really a stimulus.
Yeah, more like a Band-Aid solution.
Hmm.
And on top of that, you have rising U.S. yields and inflation,
Okay.
which makes things harder for both the U.S. Fed and China's central bank.
So that limits their ability to, lower interest rates to stimulate growth.
It's,
Okay. So we have this potential trade war, a stimulus package that's not really working, and not much room to use monetary policy.
right.
It's no wonder investors are getting nervous.
Yeah, you could say that.
I'm still a little fuzzy on this whole buyer strike thing, though.
Oh, okay.
What does it actually mean?
So it basically means that investors who were previously really optimistic about China
Yeah.
are now hesitant to buy Chinese equities.
So they're hitting pause on investing in China.
Yeah, exactly. Like
Right.
everyone decided to wait and see what happens.
Interesting.
But it's not just these external factors.
So there are internal struggles, too.
Exactly. China is dealing with some serious internal problems as well.
Okay, like what?
Well, things like deflation, property prices going way down,
Wow.
a big jump in youth unemployment,
Oh, that's not good.
and a general lack of consumer confidence.
Okay, so those are some pretty big issues.
Yeah, it's a lot to deal with.
The report also mentions that China's real interest rates are still high,
Right.
even after those easing measures.
Yeah, that makes it harder for people to borrow and spend.
I always struggled with real interest rates back in economics class.
Oh, yeah.
Could you give us a quick refresher on that?
Sure. Basically, it means interest rates adjusted for inflation.
Okay.
So let's say the interest rate is 5%, but inflation is 3%.
Mm-hmm.
The real interest rate is only 2%.
Got it. Thanks.
And high real interest rates make people less likely to borrow and spend.
Because the cost of borrowing is still high, even after you take inflation into account.
Right.
Makes sense.
And get this. In China, the growth in real retail sales,
Okay.
it's only half of what it was before the pandemic.
Oh, wow.
That's a pretty big red flag.
For sure. It definitely suggests that people aren't spending as much,
Exactly.
which could make the economy even worse.
Exactly.
So China, the dragon,
Mm.
seems to be stuck,
Yeah, they're struggling.
trying to figure out what to do.
Mm.
Okay, well, let's turn to India, the pouncing tiger.
Okay.
What's making them look so good in all this?
Well, one big advantage for India is that they're not as affected by these trade wars.
Right, China's right in the line of fire.
Yeah.
But India is more insulated from Trump's trade policies.
Exactly. Their exports are much more diversified than China's.
Hmm,
And they're not as reliant on Chinese supply chains.
okay,
Plus, with the U.S. dollar getting stronger,
right.
India's stable energy prices could make them a safe haven for currency stability.
Sounds like India's in a good spot to weather this storm.
Yeah, you could say that.
But the report also mentions that foreign investors have been selling Indian equities,
Yeah.
even though the outlook is positive.
It seems counterintuitive, right?
Yeah, why would they do that?
Well, this could actually be a great buying opportunity for investors who have been waiting to get more exposure to India.
You mean like a sale on a really good product?
Yeah, exactly.
I like that analogy.
Smart investors might see this as their chance to jump in.
That's a good point, but wouldn't less foreign investment hurt India's economy?
Not necessarily.
Oh,
There's also a lot of strong domestic investment in India
okay.
that's helping to balance things out.
Interesting.
So even if some foreign investors are pulling back,
Yeah.
there's still strong domestic demand for Indian stocks.
So what's driving that domestic demand?
A big part of it is these things called systematic investment plans, or SIPs.
SIPs.
Yeah, have you heard of those?
I've heard the term, but I'm not really sure what they are.
So basically, it's a way for individuals to invest a fixed amount of money
Look.
in mutual funds at regular intervals, like monthly or quarterly.
So kind of like a disciplined savings plan for the stock market.
Exactly. It's really popular in India,
Interesting.
especially among younger investors.
That makes a lot of sense.
And the great thing about SIPs is that they create a steady stream of domestic investment.
Right. So the market is less dependent on what foreign investors are doing.
Yeah, it's like building a solid foundation from within.
Okay. So I think we have a pretty good overview of why CLSA might be recommending this shift
Yeah.
from China to India.
We've covered the basics.
But I'm sure everyone's wondering, like me, what specifically is making CLSA so confident about this switch?
You want to dig a little deeper into their analysis?
Yeah, let's break down their reasoning a bit more.
Okay, sounds good. All right, so we were talking about China's stimulus package.
Right. And how it's not really doing what it's supposed to.
Exactly. It seems like they're more worried about
Yeah.
containing those debt risks than actually
Right.
boosting the economy.
Like putting a Band-Aid on a bullet wound.
Yeah, pretty much.
And then you add in those high real interest rates,
Right.
making borrowing so expensive.
It's not a good situation.
No, not at all.
Yeah.
So why are they being so hesitant with this stimulus?
Well, there are a few possible reasons.
Okay, like what?
One is that they're not sure how far Trump will go with these trade actions.
So they're playing it safe.
Yeah, waiting to see what happens before they make any big moves.
But isn't there a risk in waiting too long?
Oh, absolutely.
Like letting the problems get worse?
Yeah, it's a tough balancing act.
For sure.
Another concern is that they could end up misallocating capital,
Okay.
especially with their debt levels already so high.
Right, it's like digging a deeper hole
Exactly.
to try to get out of a hole.
It's not a sustainable strategy.
Okay, so that's two reasons. Anything else?
Well, there's also an ideological factor at play.
Okay, what do you mean?
They might not want to fully embrace a Western-style consumer economy.
Right, China has always been more about control and stability.
Yeah, and they might be hesitant to give up that control.
But what if this hesitation backfires? Couldn't they end up in that deflationary spiral we talked about?
That's a big risk.
It seems like a really hard thing to get out of once it starts.
It is. Deflation can be very damaging to an economy.
Okay, I'm starting to understand why they're called the prevaricating dragon.
Yeah, a lot of hesitation and uncertainty.
Exactly.
And that's where problems like youth unemployment and falling property prices become even more concerning.
Yeah, those are big red flags.
The report highlights how youth unemployment has been rising in China.
Which is never a good sign.
It can lead to social instability.
Right, and if young people don't have jobs, they're not spending money.
Exactly, which further hurts the economy.
And then you have the falling property prices.
Yeah, and in China, real estate makes up a huge part of household wealth.
So when those prices drop
People feel less wealthy.
and they're less likely to spend.
It's a vicious cycle.
Okay, so we've got a lot of interconnected problems here.
We do.
All right, let's bring it back to Trump 2.0 and those trade tensions.
Okay.
Because that seems to be a big part of why CLSA is shifting away from China.
Right, it adds a lot of uncertainty to the mix.
But I remember reading that China doesn't actually export that much to the U.S. directly.
Yeah, that's where things get tricky.
So how big of a deal is this trade war, really?
It's hard to say for sure.
Because
China often uses indirect routes to get their goods to the U.S.
oh, you mean like going through other countries?
Exactly, it's like a shell game.
So we might not be seeing the full picture.
Right, those numbers could be misleading.
So the impact could be bigger than it looks.
Exactly, and here's the kicker.
Okay, hit me.
Net exports have become a major driver of China's GDP growth.
So they're really reliant on those exports now,
They are
which makes them vulnerable,
very vulnerable.
especially with someone like Robert Lighthizer back in the game.
Oh, yeah, he was a key figure in the last trade war.
And he's known for being tough on China.
That's one way to put it.
So this Trump 2.0 situation, it could have a much bigger impact than we realize.
I think that's a fair assessment.
All right, so we've really dug into China's challenges.
We have.
Now let's flip the script and focus on India.
Okay.
the pouncing tiger.
What makes them so appealing?
Well, one thing that really stands out is their foreign exchange reserves.
Oh, yeah, those are massive.
We're talking about a safety net of almost 700 billion US dollars,
It's a huge buffer.
like an emergency fund for an entire country.
It definitely gives investors some peace of mind.
That's got to make a difference.
It does, and they're not just sitting on those reserves either.
So they're actually using them.
Yeah, they actively use them to defend the rupee.
So they're not afraid to intervene in the currency markets,
Exactly. They're proactive about maintaining stability.
which is a good thing for investors.
Absolutely.
Okay, what else is working in India's favor,
Well, their earnings momentum is still pretty strong.
even though things have slowed down a bit recently?
Yeah, it's a slight dip, but the long-term outlook is still positive.
Okay, so not a major concern.
Right. And what's interesting is that in India,
Yeah.
corporate earnings growth tends to track pretty closely with overall economic output.
So as the economy grows, earnings grow too.
Exactly.
That's a pretty good sign.
It is, and we can't forget about those SIPs.
Right. The systematic investment plans.
Yeah, they're a big driver of domestic investment.
Showing that local investors have faith in the Indian market.
They do.
Now, we have to talk about valuation.
Ah, yeah.
Because Indian equities aren't exactly cheap,
That's true. They are trading at a premium.
but maybe that premium is justified,
It could be.
given India's growth potential
Exactly.
and their return on equity.
Oh, yeah, their ROE is very impressive.
Okay, can you break down ROE for us?
Sure. Basically, it measures how well a company is using its shareholders' money to generate profits.
So a high ROE means they're doing a good job.
Yeah, they're efficient and profitable.
And India has a higher ROE than a lot of other emerging markets.
They do.
So maybe that higher valuation isn't so bad after all,
It's all about weighing the risks and rewards,
for paying more.
but potentially getting more in return.
Okay, so no investment is without risk.
Sure.
What are some of the risks associated with investing in India?
Well, one thing that CLSA points out
Yeah.
is the rapid increase in new stock issuances.
Like IPOs and secondary offerings.
Yeah, those are a big part of it.
And those are generally seen as good things,
Well,
right?
they can be a sign of a healthy market. Yeah.
So what's the problem?
Well, too much of anything can be a bad thing.
Okay. When there's a surge in new issuances, it creates a lot of supply,
Right.
and that can push prices down.
So it's basic supply and demand.
Exactly.
Even if the companies are doing well, if there are too many shares out there,
Right.
the price could drop.
It's something to keep an eye on.
I see. So it's not all sunshine and rainbows.
No investment is without risk.
Okay. Well, this has been a fascinating look at China and India.
Yeah, it's a really interesting dynamic.
We've seen how China is facing some serious challenges,
Those headwinds are definitely slowing them down.
while India seems to be seizing the moment.
The pouncing tiger.
Exactly. But it's more than just an economic story.
Right.
It's about culture, history,
And the aspirations of two ancient civilizations.
now shaping the future of the global economy.
It's a story that's still being written.
And we'll be here to keep following it.
Absolutely.
So as you continue exploring this topic,
Yeah.
remember to look beyond the headlines and the
Or
numbers.
deeper.
Think about those cultural nuances and the historical context. It all plays a role.
And most importantly, stay curious.
Yeah.
Keep learning and be adaptable.
The world is changing fast.
And the best way to navigate those changes is to stay informed.
Couldn't agree more.
Thanks for joining us on this deep dive.
It's been a pleasure.
We'll see you next time.
Until then.